Hello, everyone. Welcome to another episode of the PowerTalk Show, powered by Business Talks Weekly. Our guest today is the leading authority teaching entrepreneurs and professionals how to get their money working from today. He is the cash flow expert and anti financial advisor, Chris Miles. Chris, welcome to the PowerTalk Show.
Hey, pleasure to be here, Navin.
Wonderful. Thank you so much, Chris. I want to understand and begin the conversation why everybody calls you anti-financial advisor.
That's because I tend to tell people to not listen to financial advisors. So that's the short story. Long story or longer story is actually I started out as a financial advisor in my journey. I've actually been a business owner for almost 24 years now, and I started out being a financial advisor, teach people how to save all their money, pay off their debts. Just save it, set it and forget it, save it forever, and hopefully someday they'll have something. Well, 4 years into it, my father, he reached out to me and he said, Chris, are you going to advise me at some point? And so I sat down with my dad for the very first time. And as I looked at all of his finances, and understand my dad was the penny pinching saver. This guy saved everything he could. He was very cheap. He was say frugal, but we all knew he was cheap. And so he would save and do everything he could. And as I looked at all his finances, I said, Dad, you're 61 years old. If you were to try to retire today, you would only last for about 5 or 6 years and then you'd run out of money. And he said, well, what do I do? I don't know. Save more, work until you're 70, maybe. I don't know. And that's pretty much what he did. He did actually work into his 70s until he finally was forced into retirement due to health reasons. And he really wasn't able to enjoy his money. Now, of course, I was bothered by what was going on then. And so I started looking for answer solutions, because if he was doing everything right from what I teach as financial advisor, well, why didn't it work? So I started looking for different answers. I found real estate investing, realized that books like Rich Dad, Poor Dad, written by Robert Kiyosaki, he talks about things about how to become an investor and focusing on passive income, not accumulating money, but creating passive income instead. And so what ended up happening is I ended up just completely rejecting the whole accumulation theory, right? Of just save and save and save. Instead, focus on how do we create income. And in fact, for myself in 2006, when I was just 28 years old, I created enough passive income that I was actually able to retire from working. And naturally, because people said, well, how are you 28 years old and retired? They want to know how I did it. Eventually, that's why in 2007, I came out of retirement to teach people how to do that. And that's kind of where I became the anti-financial advisor, because I was telling them, don't listen to what those guys teach about gambling in the stock market, where you're going to make mediocre returns with high risk. No, don't do that. Do this instead. You'll save decades of pain and worry.
Wow, that's an amazing journey, an amazing story, Chris. When as you were speaking, there is something called as FIRE, financial independence, retire early. What would be your advice to achieve FIRE at an early age? What should an individual do?
Yeah, don't listen to the people that talk about fire, is what I would say first. Maybe I'm an anti-fire, not just an anti-financial advisor too. And the reason I say that is because I actually did it. In fact, I had to do it twice, because the recession, I actually went broke and had to do it again. So by the time I was 39, which was 2016, I was able to go from $1 million in debt to once again financially independent, where I had enough passive income to pay my bills. And so I had to do it twice. And the funny thing is, I joined the FIRE Facebook group, and when they started saying, oh, well, yeah, you save everything in the S&P 500, into the stock market, save in the stock market, live really cheap, minimalist lifestyle, and then you'll be free. And I said, well, that's stupid, because I can tell you that you guys couldn't save enough to be able to do that, because you think of the 4% rule works, and it doesn't work. Especially when you're in your 30s and 40s, it's actually a 2% rule. And because I said that, the FIRE group kicked me out, even though I actually did it. And many of those guys hadn't done it. They kicked me out of their group because I told them the truth, right? Which is, it's way harder than you think it is using your method. So here's what I would say to do differently, because it's not about saving in the stock market, trying to build up $1 million+ and then live on 4%. That's just not going to work. Instead, what you do is you find passive investments, right? Ones that you aren't hands-on as much. You can do hands-on investing, but that's going to be more work. And so I like to find people that actually are doing the investments, that I can give them my money and let them use my money and then pay me an actual agreed upon return. So for example, I'm not even going to talk about rental properties, because that's already been talked about a lot. But like the thing I learned first and foremost, I said, wait a minute, there are real estate investors out there that want to borrow my money and they'll pay me 10, 12% in interest a year. And the answer is yes, all day long, right? Some will even pay more. And so I would do that. I would actually, that means if I had $100,000, if I gave them that money to use to, maybe they're going to renovate a property and then sell it and make a big profit, they'll pay me $1,000 a month for that $100,000. And so if I want to live on 1,000 a month, all I need is $500,000 to do it. Understand that 5,000 a month or 60,000 a year, if you were to do that in the stock market, you would actually have to save up closer to about $2 million. So you have to save up 4 times the amount of money in the stock market to do the same thing I can do with real estate. And that's the big difference, right? That's the huge difference. And so that's what I teach people now is no, there's this whole other world outside of the stock market, things where you could invest in things like real estate, oil and gas. It could be anything in business. It could be car wash businesses. You can go in with other partners and get joint ownership in it and do things like that. So all these kind of things you can do that have been available the whole time, but usually it's only the wealthy that have done it, not the common man. So that's the thing I would say is if you want to become fire, first and foremost, find those that have been there, they've done it, and they're still doing it today. And also just don't follow the whole fire movement. Like follow people like myself that actually did it.
That's a very interesting take, Chris. And what would be, because you are a cash flow expert, I would like to understand what would be your percentage of allocation when you diversify funds through real estate, oil and gas, and some other instruments.
It really can vary. There's not really a one size fits all. Anybody who says otherwise is usually trying to sell you something, right? But I will tell you, I mean, like the biggest thing I tell people is don't put more than maybe like 25% or so with one company or operator. That's one mistake that a lot of people will make. They might have it in different investments with that same operator, but I actually tell people like don't do that. For example, I have one guy that's in my network that we have that does a lot of oil and gas investments. Every month he's got a new deal. And every month he makes it sound like it's the best thing of the year, right? And so every month our clients are tempted, hey, should we put more money with this guy? Should we do more and more? And I have to tell them, like, no, don't do that. One person actually put over half of their money with this one guy, even though we said don't do it, they did it anyways. And then, of course, when oil prices came down, even though they were making like 20,000 a month, they watched their income drop by $8,000 a month. And so all of a sudden they're like, oh, that wasn't good. Our income got cut in half. I'm like, yeah, calm down. You do want to diversify. So it's not about what percentage you have in real estate versus oil and gas versus business or whatever it might be. The key thing is it has to align with what you're trying to accomplish. For example, some people don't care about the monthly income right now. They want to just grow their money. And there's different investments that grow better. For example, buying a rental property is not as good from an income standpoint right now, but it can be good from longer term growth. On the flip side, though, if somebody wants cash flow right now, income right now, then I might say, well, maybe lending would be a better thing because right now lending has been safer than some of the other investment strategies right now. And they're paying 10, 12% a year. So that's where we might have them kind of allocate according to their goals more than just where to put their money in general. Yeah, there's always uncertainty, right? And then one thing that's funny is people keep wanting certainty, but you just never will get it. That's the truth. You can't do things to help protect yourself in uncertain times, right? And so I do foresee, well, actually, I don't even have to foresee. The truth is what we're finding out in the US is that because they were lying about their numbers, kind of like China does, right? When they like to lie about their numbers too. US does the same thing, even though they accuse China of doing it all the time. US also lies about their numbers, like unemployment. They'll lie about inflation numbers, things like that. And so really since about April of last year, we've been in a recession. But nobody's been talking about that. They're just saying, oh, everything's fine. Everything's great. AI is going to make us create this huge boom. I really believe that the worst place to have your money right now would be the stock market. Like now is the worst time. The stock market's so overvalued. We even have companies like Oracle, tech companies like Oracle, who literally became huge overnight after they had worse than expected earnings, right? So their numbers were worse than expected. Usually that means the stock will drop. But thanks to the fact that 90% of trades are not done by humans, they're done by algorithms and computers, right? This computer is doing the trading. It jumped up 35, 40% overnight. Even though it should go down, it went up instead. So there's a lot of manipulation happen in the stock market. You want to stay away. Stay away from these that get manipulated a lot. So I like to go for more real assets and things that do have some certainty. For example, here in the US, it's different in different countries, but in the US, I'm keeping a lot of my money stored inside my life insurance policies. Because although life insurance is meant for a death benefit, in many countries, it's true of this too. There's some that have what's called cash value or this tax-free savings account that I can have my money stored in. I'm making 6% a year tax-free with no risk, which you can't find hardly anywhere. So I'm keeping a good chunk of my money there, but I'm also putting money in different aspects of real estate, things that do pay income, things that are a little bit safer in case we do move into recessions, that not be beyond just lending. Sometimes if people start to downsize, self-storage units can be a good place. I think apartment buildings will actually make a comeback because apartments have been bad for the last 3 years. One of the best ways to know where to put your money is sometimes look to see what nobody wants to put their money in. Because whatever nobody wants to put their money in, that's usually where you should put your money. Because when everybody wants to put their money in, that's usually right before it goes down. And that's been the stock market. People have been telling me for years, they're saying, well, stock market, it always goes up. Really? Always? That's not true. The last 16 years only went down once in 1 year in 16 years in the US stock market. That is almost unheard of. That's a once in a lifetime opportunity that happened that now is gone. But people are still treating it like it's going to keep going up like that. That's when, and especially when people are using excessive debt and speculation, that's when you know things are about to crash. And so I believe that the worst place to be in right now is the place where everybody tells you to be, which has been the stock market.
Wow. So in that case, I would like to understand from you, what would be your best advice to a young professional, maybe who has just started his journey? What would be your best advice so that he looks at a 10 years, 15 years of growth and expansion?
Yeah, with the AI boom and everything, and we use AI a lot in our company, I'll tell you, humans are more important than ever, despite AI, because what it allows you to really shine in who you really are. So if you're a young professional just starting out, I would recommend this. Don't even worry about investing. Save money, yes, but do everything you can to build up your income now. Invest in your own education and training to become more valuable to your employer, or if you're a business owner, to your customers and clients, those people. Keep building your skill set, keep becoming more and more valuable. I mentioned I went broke in the previous financial crisis, right? That we had. When I went broke in the financial crisis, I couldn't tell people, here's how to get out of the rat race because I was back in the rat race. I was going broke. And so I stopped doing that. I started doing what people were asking for, which people were saying, Chris, I would love to learn about how to get out of the rat race, but I just don't have the money to pay you. Now I would tell them, I said, listen, if I could help you find the money, because that's what I was doing in my own personal life. I wouldn't tell them I was broke. I would just tell, but I was practicing in my own life how to find money and free up cash and do things to stretch out my dollars better. And so I told them, I said, listen, if I can help you find the money, will you pay me? They said, yes. It's like, great. Here's some things you can do. And I looked at their whole situation, find ways to free up cash flow, save on taxes, creative ways to pay off debt and things like that. I would do that. And then they're like, cool, well, I'm going to pay you. And so I literally was able to pull out of my own personal recession, really depression in a lot of ways. I was having my own financial crisis. I was able to pull out of that crisis because I was focusing on creating value, solving problems, serving people where money was just a natural byproduct. That is what you should do as a young professional. Stop worrying about, should I buy Bitcoin right now or this or that? Don't worry about those things. You should just be worrying right now about how do I increase my value with people that I work for, therefore increasing my income, and then taking that income and then saving it, even if it's safe in a bank or like the strategies I was talking about with life insurance or whatever it might be. Save it there for now, build that up. And then when you start building up into 150, 200,000, $250,000, once you start to build up that number much bigger, then we can start talking about investing it somewhere else. I would say probably it goes along with what I just mentioned, right? Is that dollars follow value. The more value you create for other people, the more dollars that naturally follow. And so stop asking, how do I make more money? Don't ask that question because it doesn't work. People have asked it for generations and they're still broke. The best thing to do is, what can I do to create a win-win for people? How can I serve them? How can I solve problems for them in a way that they want to exchange money because they know that I'm more valuable being in their life than not being in their life. And that's really the key to making more money as a business owner and entrepreneur. That's the key to making more money in general so that you have more that you can make with it. I'll tell you, there's no faster way to create wealth than figuring out how you can become valuable to other people.
Absolutely. Thank you so much, Chris. It was very insightful. It was very inspiring. Thank you so much for this conversation.
Such a pleasure. Thank you.